Hello, and good morning, everybody. JJ Edwards here with another tape reading and live execution. We are into the New York session. It's 9:30 New York time. So let's get to it. Nasdaq is trading at all-time high. A bit earlier at 8, we had a high impact news. The price took the high. And currently, yes, we have 15 minutes left to the New York session open. We are trading at point of control, and at the lows, let's look at the lows. We have relevant equal lows there and here. So let's go to 1 minute chart. Okay, we have formed some sort of head and shoulders pattern, and here we see we do have a head at the high, the left shoulder and the right shoulder also. Right now we are trading inside this fair value gap. Point of control is at $27,000. Over here, cumulative volume delta shows we had aggressive buyers, but the price did not make equal highs. Cumulative volume delta did, so that's bearish for Nasdaq, at least for short term. I would like to go short on Nasdaq before the session starts, but I would like to find a good price actually. So over here I have this gap. Let's have it on our chart. Since we already did the damage at the high, my bet is during New York session, as soon as the market opens, it's going to have a damage to the lows. So the bulls, let's see if we get a feel. Okay. I want to move the stop all the way at the value area high and perhaps bring the TP to value area low or below this low. One thing I forgot is to measure this. 50% of this tail is at 26,972. So I would like to get one out at the mean threshold of this tail. Okay, here I have added the dynamic levels, this yellow line. The dynamic level, what it does is actually, it is the history of point of control. As the point of control changes, the dynamic level changes as well. Long story short, if the price is above the dynamic control or the point of control, we are in a bull market. If it's below, we are in a bear market. So currently, as over here, you see the prices keep tailing inside the point of control, which is $27,000. We are making new higher highs. That makes the market bullish. However, I mentioned we had a liquidity sweep. We had a stop run. Those stop run was for the bears, retail bears. Now I am targeting the stops for retail buyers, for retail bulls. Okay, there we go. I'm going to move my stop. I moved the stop to break even. Let's see if we would take my trade. The spread is high again. The spread is high again. The spread was very high. So, okay, I closed it here. Let's look at the statement. It's $645. All right. It tailed all the way in, but the spread is very high. I'm glad that I closed that order. More sellers are stepping in. The delta is negative, making a new low, but it doesn't. Point of control, 740 contracts. right at $27,000. It did not take any sell-side liquidity yet, at least only below this level. It respected it here. The tail closed above 50% of this tail. That's bullish. Let's see if we have a continuation. It's going to attack at least these lows or not. But on the other hand, if I want to become bullish, once I see the price close above this fair value gap, I will wait for it to return to the same mean threshold, and from the mean threshold, I might go long, leave my stop below this tail. Let's wait for the price action, and also the spread should become normal again. Now I'm looking at this bearish candle. This bearish candle, if it converts into a bear trap, I will go long. What do I mean? I mean, if the next candle is bullish, I will go long one contract, and I will keep one contract as pending in the mean threshold, because the price can run higher and attack the London session high. Okay, let's look at this candle. The body is closed above. Now let's go one buy over there and place one buy limit at the mean threshold. Stop goes below this close, which is slightly below the lower line of this Bollinger Band indicator. As for the TP, I would like to exit one sell order. I will to exit one contract at this high and keep the other one runner, because we are really in a very big badass bull market. So we have two. Okay, I closed that one. I will keep this order open. If the price returns to the mean threshold, I would like to add to my buy position. And then I will target, if the price goes and take the highs, I will cancel this pending order. If it doesn't and returns into this fair value gap, I will enter one contract and target these highs. $52 contract sell. Look at the cumulative volume delta. It is showing a massive sell. Let's add our volume to the chart. Okay. Yes, the selling amount is significant on this candle. Looking for an inversion. There's a gap in here. I want to mark this gap, the low of this gap. Now I have to do business with this gap. I can see that sell-off in the cumulative volume delta as well. All right, now look at these two bull candles. If these two bull candles are bull trap, the price should not exceed 50% of it. So at 50%, I can add a sell limit, just one contract. I don't want to risk much, only one contract right now. I can add more if I see a confirmation in the trend. Yep, that's perfect. 1 to 3 is right at the point of control, and price usually tends to return to point of control. As I mentioned, point of control is right now, as you can see on the left side of the chart. Let me remove myself a little bit. On the left side of the chart, you see 819 contract. That's now 1,000. So the liquidity at the lows are kind of thin. When that happens, the price usually tend to go back into that same level to accumulate or distribute more. So this setup will give me 1 to 3. Over here, Bollinger Band, the price tailed into it. I'm very confident in this trade. We had a sell-off. We also saw the big trades. Right at the top, they appeared. We have 52, 55, 372 contracts sold in the body. I hope I can add. If I get an inversion, if I have a close below this level, I would like to utilize the mean threshold of this fair value gap or the lower level to go short again. Let's add one more sell limit in the middle, because I want to close one trade a bit faster. I will tell you why. So over here, what I see in a cumulative volume delta, I see a ton of sellers entering the market, making equal lows. However, the price is far away from this low. You see that? Cumulative volume delta has flat lows, but we have a lower high in the price. That's why I want to get out this trade a bit sooner. If I get another fill, that would be very, very nice. Or maybe here, because I'm confident that the price will likely go to at least to the mean threshold. If I don't get a fill, I'm not gonna exit here. I will exit at that price. Now I have these two bullish candles in here. These two bullish candles are trap buyers. The price should not go above it. If it does, then I'm wrong, and I will be out with $150. Okay, order is filled. I don't want to add 3 contracts. That's too much. The risk is too high, $780. Let's make it 500. 470, 590. I really can't see anything on this platform. All right, let's get out one contract at the mean threshold. Let's get out one contract at mean threshold. Okay, now we can see everything much better. $1,100 profit. Thanks God the spread is not that much. Point of control, I said $27,000. That's where my profit is. All right, that one is done. I'm moving my, I want to move this stop. If I move this stop to break even, because I added one position to my sell order, my dollar cost average price is kind of bad now. So if I move my stop to break even, I might get close. It might close me. So I will move it to minus $100. That's slightly above this bullish candle. We have more trapped buyers in here. Okay. The spread is high again. You see that? All right, that's good. That's wonderful. It was a very easy setup. The first trade, which I took before the session starts, it was kind of stressful, but the second order was a textbook. The market really, it showed its hand. It took a high, formed a dodgy candlestick with a long wick at the high, exceeded the Bollinger Bands upper line that's overbought, big trades, trapped buyers, and massive sell orders appeared. Here, however, it did not give me good entries after the inversion. So here it inverted the gap. Retail or a lot more logic traders who have less experience, they could enter at the bottom of this inverted fair value gap if they could get a fill. The ideal was the mean threshold, but the price ripped lower very fast. Okay, here's a statement for today. Let's go for today. So today we, oh my God, no losses. Well, that's trading all-time high. It's easy. The market kind of shows its hand. Let's check the statistics. Thank you for watching this episode. I hope you loved it and it added value to your trading journey. I will see you tomorrow again with a new tape reading. Until then, stay safe and stay observant.